Cathy, do you have an example of somebody using points versus not using points?
Sure, absolutely. So, and again, just understand all of this changes, and the big takeaway I would hope that anyone would have is that it's very specific to each client's circumstances. So there's a general understanding of what it looks like as to, is it better to or pay points or not pay points? Very difficult to analyze that without approaching an actual expert and talking through a long-term plan and a long-term strategy. That being the case, I did prepare an option with some specific numbers to kind of give a sense of things. So let's just assume your client is purchasing an $800,000 home and they have a 20% down payment. They're going to borrow about $640,000. That's their loan amount. And they want to look at, well, what's the actual cost of a point? So in this case, again, our loan amount is $640,000. So option one is, you know what, I don't want to pay points. I want to keep my investment at closing to a minimal. I'm fine with a little bit higher payment. I want to keep money aside. And one reason to maybe do that is, you know, I'm moving into a house that's going to need some work. If I pay a point, that money's gone now. And is that going to put me in a position where maybe I need to put my home improvement on a credit card at a much higher interest rate? So those are some of the things, or the context under which we would take a look at this. But again, that being said, 0 points, we're looking at a principal and interest payment of $4,068. Okay. So again, 0 points. My total cost to close is about $196,215. That includes all of our closing costs. And then as means for comparison, let's say I don't want to pay quite a point, and there's all different breakdowns. And what changes in the market on a day-to-day basis isn't necessarily the rate, it's the cost associated with that rate. So today maybe you could pay a quarter point and get an eighth lower in rate. That's going to be a very different conversation. Like, gosh, if I can pay a minimal amount and get a lower rate over the life of the loan, that may make good sense. If I'm going to pay a full point, in this case, I'd be paying $6,400. That's a pretty hefty sum of money. I'm going to want to see a pretty good rate of return of investing that money, because not only am I paying it at closing, but it means I don't have that money to invest. So something that I'll propose to some of my clients when they're talking points versus no points is, okay, if you took that same $6,400 and you put it in the bank and you drew the difference in monthly payment, how long would that last you? And then you still have that to fall back on. So these are some of the questions that I'll ask when a client is looking at paying points or not paying points. But that being said, in this case, at 4 1/4, and again, this is generic, rates change all the time. This isn't necessarily, this is just an example. 4 1/4, 0 points, my principal and interest payment is $4,068.42. Then I say, you know what if I wanted to invest a half a point? So basically at that point, about $3,200 in points. What would that do to my monthly payment? It's going to drop my payment to $4,021.76, or a difference of $46.66 a month. Okay, so I invested a little over $3,000 to save a little under $50 a month. Is that the best use of my money over time? If I'm going to be there 30 years, then I start looking at, or even 15 years, then you start looking at some significant differences, right? So I invested $3,000 at closing to pay my half a point, and over 15 years I saved $11,145. So over 15 years, it makes a lot better sense than if I'm only going to live there 5 years.
So it sounds like the timing is definitely important to look at.
It's a huge piece of it. What you know, again, no one has a crystal ball, but in a perfect world, is this the house you want to live in for the rest of your life? Well, then maybe paying a half a point or a point to get a lower rate, you know, to lower your rate by $50, or in the case of paying $6,900, at that point, lowering your rate significantly more. Then you're saving more per month. So your monthly savings at that point, you're looking at saving about, bear with me here a second, your difference in monthly payment is $93. So again, almost $100 in savings, but again, you invested $6,400 to save $100. So that kind of gives you a sense of the actual numbers associated. The point is the percentage of loan amount, not purchase price. Sometimes that can be a bit confusing. So it's that lower number, the amount you're actually borrowing, the loan amount, that's what the points are based upon. And it can be anywhere from paying a quarter point, a half a point, or 1 point, and that difference, and then the monthly difference, is going to kind of be dependent upon long-term planning for that property.
Great, thank you.
That's it? That's all you had?
He's killing me. He's killing me. I'm like, that's